Welcome back to Smart Money Moves, where we discuss everything day trading to investing to crypto and everything in between. Today is a super exciting day because we have quite a few economic news releases, along with FOMC meeting minutes from the Fed. There's a lot to unpack here, so let's jump right into it. All right, first up, let's talk about oil because it's having a pretty decent day. Oil prices are climbing higher on the back of an unexpected drawdown in U.S. crude stockpiles. West Texas Intermediate for August delivery rose 1.6% or 90 cents to settle at $56.36 a barrel on the New York Mercantile Exchange. Meanwhile, Brent crude, the global benchmark, also gained, rising 1.2% or 81 cents to $66.67 a barrel on London's ICE Futures Exchange. So you can see both benchmarks closing above the 50 level, which is great to see. This comes as Cushing, Oklahoma, the largest U.S. crude oil storage hub, saw its stockpiles drop by nearly 1 million barrels last week, according to the Energy Information Administration. The data also showed that total U.S. crude inventories fell by 4.4 million barrels to 492.4 million barrels, which was the largest drawdown since early June. At the same time, total motor gasoline inventories fell by 2.5 million barrels to 242.1 million barrels. The biggest drawdown since April, this comes as demand for gasoline remains elevated during peak summer driving season. With the price of gas still hovering around the $3 mark nationally, it's safe to say that this trend will likely continue throughout the summer. The EIA also reported that total domestic production rose to 11.8 million barrels per day, the highest level since March of 2020. If production continues to increase, we could see prices stabilize over the coming weeks. Next up, let's switch gears and talk about gold, because it's also having a decent day. Gold futures are higher as well as silver after the precious metals were under pressure earlier this week from a strong US dollar and higher treasury yields. COMEX gold for August delivery rose $10.82 or 0.5% to settle at $1,807.62 per ounce, while August silver gained 22 cents or 1% to settle at $21.08 per ounce. As the dollar retreated from its recent highs and treasury yields eased slightly from multi-week highs, both metals were able to bounce back nicely. It'll be interesting to see how they react once the Fed concludes their two-day monetary policy meeting tomorrow. Will we see another rate hike? Finally, let's switch gears and talk about Bitcoin because it's been moving sideways for quite some time now. Bitcoin is moving sideways after falling to its lowest level in nearly 3 months earlier this week. Bitcoin was at one point hovering around $31,000 before rebounding slightly and coming back down to $32,000. The largest cryptocurrency by market cap has been consolidating in a relatively tight range in recent weeks amid uncertainty about the future direction of interest rates and the overall economy. There's also been some regulatory concerns regarding stablecoins in the US, but even with all of this, there are still plenty of positive catalysts for Bitcoin. In fact, just yesterday we got some really great news out of BlackRock, the world's largest asset manager. They filed a new registration for a Bitcoin ETF with the SEC. Of course, this is not a done deal yet, but it does bring hope that we could see the first ever Bitcoin ETF approved in the United States. If this happens, it would be a huge catalyst for Bitcoin and cryptocurrencies as a whole. We're already seeing the effects of this with the price of Bitcoin stabilizing and starting to move upwards. So what do you think? Are you bullish or bearish on Bitcoin? Comment down below. I'd love to hear your thoughts. Now shifting gears, let's take a look at the FOMC meeting minutes. The Federal Open Market Committee says that most participants judged that it would soon be appropriate to slow the pace of these rate increases, while noting that almost all participants anticipated that it would be appropriate to raise the target range at upcoming meetings. In other words, they're saying that a 50 basis point rate hike in July is highly likely. The only question is, will they signal a pause after that? Or will they continue to play it by ear and adjust the rate hikes depending on the incoming data? In the previous meeting, they were much more aggressive and signaled the possibility of another 50 basis point rate hike in September. However, with inflation starting to cool down, they may decide to take a wait-and-see approach and potentially signal a pause after the September meeting. Of course, this is all speculation until we see the actual meeting minutes, so make sure to stay tuned for our next video where we'll go over them in detail. Now, before you go, please make sure to smash that like button. It really helps us out and keeps us motivated to continue making great content for you. Also, if you're not already part of our community, make sure to join. We've got a ton of giveaways coming up that you won't want to miss out on. Thanks for watching, and we'll see you in the next one.